Bitcoin's gains of yesterday showed tremendous promise, but then we woke up to a big red candlestick, and many of you are wondering, should I be holding these altcoins? Should I be buying the dip? Should I be exiting the market completely? What is the right play? Now, I'm a big fan of diversification, and since DeFi came into the frame, we now have the ability to earn yields while completely escaping the volatility of the market or keeping our coins for the most part entirely in the majors, Bitcoin, Ethereum, and so on. And essentially, you can lock in your gains in the market, lock in your holdings in the market, and still earn some pretty fantastic yields. Are you gonna 10x overnight? Well, of course not. But wouldn't it be great if you were earning little dividends on your dollars, continuing to grow your wealth, meanwhile shielding your stack from a potential collapse of this altcoin season? So if you guys are excited to learn how I'm diversifying and essentially protecting my wealth here in crypto, then do me a favor and absolutely destroy that like button. As usual, each and every comment is entered to win your very own Ledger Nano S, so make sure you leave a little comment below and you'll be entered to win. This is of course for subscribers only. So one of the great things about the community we've cultivated here is that you guys are incredibly smart. Each and every time I check in on the Telegram group or the comments on my Twitter, I can tell just how educated and informed you guys are. So is it any surprise that when I tweeted the other day, where can I generate / farm the highest yields with my stablecoins right now, with or without governance tokens, I got some fantastic replies. So shout out to all of you guys who participated, as this helped me craft my episode. So if you guys aren't following me on Twitter, I'd highly encourage you guys to do that. The link for that is in the description. Let's start here with Yearn.finance. If we go to Yearn.finance, they have a bunch of products here, but if we go into the vaults, you'll see that DAI is earning about 70% APY, which means in theory, if I were to have my DAI, a US dollar equivalent stablecoin, locked up for an entire year, I would be earning 70%, meaning if I had $100,000, I would earn $70,000 in passive income just by leaving it here in this smart contract. Now, it's important to realize there are smart contract risks. There are inherent risks that this could be buggy, that this could get hacked. It's not like this is a guaranteed slam dunk thing. This also changes dynamically as the yields coming out of your stablecoins are ever changing and algorithmically determined. DAI might have a higher yield today, but hey, that might change to true USD tomorrow. And it's important that you stay on this because it might be Tether or USD coin or DAI. It's really hard to say. But as you can see, these are earning some pretty fantastic yields, and YFI, just getting the Coinbase treatment, is pretty much the leader in this yield farming space. And I'll link all these in the description, but now we're on Fulcrum Trade, which is by BZRX or BZX, that project. And you can see here they have USDC at 79% yield and Tether's here at 76% yield. I would consider BZX a pretty established project in this space. But remember, in all these projects, there is smart contract risk. There is existential risk here. This isn't the same as just putting this in a safety deposit box at your bank. You could potentially lose all your funds. I have to reiterate that. However, while that risk is there, it's not as persistent as the risk of just your altcoins losing value. So I think that the risk reward pendulum here evens out enough that it might make sense to stick some of your funds in DAI, some of your funds in USDC, some of your funds in USDT. As you can see here, there are other options, but if you're just looking to farm your stables, it looks like it's some pretty attractive interest rates here with DAI, USDC, and USDT, all pretty much hovering between 70 and 80%. Then there's also less decentralized things like CDFI, like you're hearing CZ talk about. There's products on exchanges like HotBit that promise you up to 151% annualized return. They say it's risk-free and a reliable mechanism, but again, nothing is risk-free. There's always risk. So they're pretty much advertising 0.5% per day here. And you can see they allow you to stake a wide variety of assets, from Ethereum to Bitcoin to even XDAI stake, some of the more exciting little small altcoins, including, look, PHA, Fala Network, which we covered yesterday. They'll give you a 10% return on that. So they allow you to stake a lot of different things for returns here. Again, this is like, there's also mStable, which is one of the more established DeFi stablecoin lending ecosystems, and they offer an APY of 34.5%. Now here you can get crazy returns, and this is where we get into more of the yield farming that's non-stablecoin related, and that's because you have to essentially deposit liquidity pool tokens. Essentially what you have to do is you have to deposit liquidity pool tokens that are on Uniswap by essentially providing liquidity to BNSD/ETH liquidity pool on Uniswap. swap, and then you deposit them and it gives you an APY in the thousands of percents. Now the reason why this exists is because this, one, goes down all the time, and two, you run the risk of something called impermanent loss. Now, impermanent loss occurs when essentially the ratio between BNSD and ETH changes, meaning if BNSD, which is a very volatile new yield farming token, which has really gone up and down, as we can see here on the price chart, it has rocketed from literally 1 penny up to 22 cents, back down to 5 cents, all the way up to 21 cents, and now back down to 7 cents. So as those changes occur, you're actually experiencing huge losses in your liquidity pool tokens. And so when you come back to withdraw your liquidity pool tokens and convert them back to BNSD and ETH, you'll end up with some serious losses. It's called impermanent loss because it's not realized until you withdraw your tokens. But that's why these are so high. So these come with a huge catch, and I wouldn't call these stablecoin farming. You're not actually farming with stablecoins. You're farming with really volatile coins like BNSD and ETH. They're both volatile, right? So that's what these are all about. But nonetheless, BNSD is one of the more sort of high yield ones that's come up over the last week. Then we have something like Celcius. Now, Celcius is actually an app, and they have some APYs that are much more reasonable, like 6.8%. I absolutely love Celcius's branding. They just have this really just clean and nice and professional branding. It feels very like 2020. It feels very like appy and nice. They have a centralized backend, and they're managing your funds for you. So if you go to earn here, they have 15% APY on your Tether, 6.13% on your Bitcoin, and you can see they have a variety of options. I'm going to be doing a deeper dive on Celcius, showing you the difference between Celcius and other products in the very near future, but this is another option. And as you can see now, I'm on Binance, and they actually allow you a variety of staking options now too. Staking DAI through Compound for 12% returns, BUSD for 50% returns, USDT for 60% returns, and BNB for 60% returns. And so this is coming soon. They obviously have a risk warning. Binance strives to offer its users the best DeFi mining projects. However, Binance only acts as a platform to showcase projects and provide users with related services, such as accessing funds on behalf of the user and distributing earnings, etc. Binance does not assume the liability for any losses incurred. So you see here that Binance is trying to give you the company line here saying, hey, something might go down here. And that's what I'm trying to explain to you. There is inherent risk here on all sides. As soon as CZ actually started talking about his CDFi here, you see Binance bounced like crazy off of its lows of $19 and it rocketed up to over $30. Now over a 50% growth in one of the biggest projects in the space, taking it to almost a $5 billion market cap and bringing it into the top 10 once again. This thirst for yield farming, for DeFi, for different kinds of passive income here is huge. And obviously we know when CZ does something, he does it well typically. So this is probably a harbinger of more things to come, as we could see a lot more movements into the space from the majors. But we will see, I think Binance is by far the biggest entity to try to do this. They'll be offering their own suite of yields. So as you can see, there is a smorgasbord of opportunities. And so there's always new ones of these popping up, like this one, harvest.finance. Again, extremely risky here. I have no idea if these contracts are audited or anything, but you can see incredibly high APYs like this, 274% plus 443%. And that's because I believe you're farming exclusively these swerve tokens or these farm tokens, that you're not really getting DAI back, which is the main important thing, is you're not actually getting the asset that you put in. Whereas on these other platforms, you are getting more of that DAI, that initial stablecoin. So that is money that you can take and kind of be a little bit more secure with. So if you're a risk taker, you can start farming some of these more exotic tokens like Swerve and Farm. I personally don't do this just because the few times I've tried, I've gotten totally slaughtered by the market. And, I didn't do it with a lot of funds, but it's worth noting that I've had very little success with these huge, ridiculous APY tokens. But they can work to your advantage if you play them for very short-term gains, catch a nice wave up, and then kind of exit your position. But these are another example of things that are out there. There's also this Nyan 8-bit thing, as well as Cream, which, these sort of retro ones start to get a lot of different activities, even though to me their yields have kind of calmed down. They're not as exciting as the other ones. If I was to do anything right now, to be honest, I would just go for DAI on Yearn.finance or maybe Fulcrum trade, going for USDC or USDT here and just getting a reliable 70-something% interest rate, which is ridiculous. ridiculously high, probably about 10x higher than you'll get anywhere in the real world. And for the haters, it's nice to see that DeFi is having a nice turnaround in the TVL. You know, DeFi went on this parabolic run up, and if it starts getting rejected too much, this isn't TA, right? But this is a good indicator of the health of the DeFi ecosystem. So seeing it bounce here off the lows of about 6.1 billion and get back up to above 8 billion, let's hope it can trudge back up to this high and get above even 10 billion. That would be very bullish for the space. But for now, we're seeing a little bit of a cool off that came with the same sell-off that we saw in the market. Also, if you guys were in YFbeta, they just deployed their contract and yield farming is coming soon. And so that explains this massive pop off. Obviously, I mentioned this on my Twitter at the beginning. I think I mentioned it before this price action even happened because it was about $200 when I mentioned it. And then it mooned up to over 1,000, dropped down to 400 or so, went back up to over 2,000 and then collapsed down here to about 600. And we see it now finally for the first time popping back up, showing signs of life. So who knows, maybe this will become the yield farming token of all yield farming tokens. Right now at a $10 million market cap, it is objectively tiny. So it has a lot of room to grow to catch up with the creams and the YFIs and the YFIs and all that stuff. So we'll see if YFbeta can do it. Again, buying these tokens is a little risky. So I'm hoping they deploy their contract soon so we can farm them. As we're talking about a lot of yield farming projects, I thought I'd give YFbeta a little bit of a shout out. The market is quite uncertain right now. Bitcoin getting rejected off that resistance, not what we wanted to see. Again, it shows that there might be more downside. And so it's important that you realize that there are opportunities, whether farming stablecoins or even shorting the market if you're an experienced trader. And there are some links where you can get bonus deposits, 50% on Prime XBT and $140 on FEMEX. So if you guys are experienced traders and you're not signed up for those exchanges, you can get some exclusive bonuses by signing up with my links. If you guys are not experienced traders, I would highly recommend that you don't do that. Farming stablecoins offers a much less sophisticated way that you can continue to earn money here in crypto, even if the market is uncertain like it is right now. Big congrats to everyone who got into Fallow, which performed insanely well over the last few hours. Hopefully it's a sign of many good things to come with that project. All in all, I'm excited about what the future holds, as I believe we might be looking at an amazing dip opportunity, where if Bitcoin is to rocket off one of these support lines, whether it's 9,100 or God forbid 7,100, I'll be ready and waiting for that reversal candle so I can be getting some of the best projects that we know are ready to pump like crazy at incredible discounts. That's my strategy. And until we see a total capitulation on Bitcoin, which I don't believe is happening, I'm not going to completely exit the market. I hope this episode helped you guys understand that you can take advantage of stablecoins to essentially exit the volatility of the market. If you're too uncertain, which the market is very uncertain, we don't have stimulus, DXY, the dollar is pumping, the NASDAQ's dumping, all of the macro factors that we've been looking to are not really spelling that positive of a picture. So if you guys are getting cold feet, or if you want to protect some of your assets, which there is no pride in being the riskiest trader in the world, never feel bad about protecting your gains and using these stable coins to start farming some ridiculously attractive yields. Because if you've amassed a nice amount of profits here, then those stable profits can potentially give you a yield that's tasty enough that, hey, you don't get FOMO of missing out on the next pump. And once the market turns fully bullish again, you'll know that there will be tons of gains to be had. If this episode helped you guys understand the market a little better, I'd certainly appreciate it if you smash that like button. And remember that each and every comment on this video is entered to win your very own Ledger Nano S. If you guys didn't get in on the Fala pump before, well, maybe it's because you guys didn't have the bell notification on. So if you guys wished you had been made aware when I put that Fala video out, well, then I highly encourage you guys to subscribe and put that bell notification on, because we'll be here lifting these heavy bags and getting in shape for when this market turns fully bullish. As you can see, I got my weights set up right behind me. It seems like this market just needs one more bullish setup to really take flight. And so if we go down and test that 9,100 level, I'll look for a big bounce to see if the market's ready to turn bullish again. And if we go down even lower, I'm hoping the $7,000 level will be that huge springboard. So there's still opportunities for these things to turn completely around, and I'm still extremely optimistic about the future of cryptocurrency, especially as our monetary policies in the centralized, fiat-driven world are as uncertain as they've ever been. As always, thanks for watching. I encourage you guys, follow me on Twitter, join my Telegram. The links for both of those are in the description. My name's Elio Trades. I thank you so much for watching, and I'll see you very soon on the next episode. As usual, I thank you guys so much for watching. I hope you guys are having a happy and healthy weekend, and I will see you very soon on the next episode.